135 on the 23rd. Just kicking things off from opening bell this morning. Just closed out a couple of short-term option plays that I had running yesterday. I'll talk about those in a little bit. We've got some, well, slight gap, I guess, to the downside. Looks like the Qs, closed on a little rally all day yesterday. 366. We gapped lower, closed higher, gapped a little bit lower today. We'll see what the day is. Maybe it's an inside candle. High or low, we'll find out. Chart alarms are set all over the place. The SPY also opened up. So just some short-term trading. I just closed this bad boy out here. Let's see here for $1.80. So this was closed for $1.80 credit. That would be 87 cents net profit. And then this one I closed out for $1.80. Credit, which is 16 cents net profit. And those are trades I had running yesterday with gap lower. Options were in good profit. So overall, that's another $1.03 today. So it puts me at $1.06 for the week. Yesterday was a bit of a break even, pretty active, but $1.06 for the week, which is fine. $2.15 last week, $1.06 this week. So we're surviving. Just grinding out some trades, and then overall the week's been pretty solid. Forex has been crushing it. We had some great robot trading this week. I'll review that before we're done. Let me log into YouTube and say hi to everybody. And say buenos dias. YouTube.com/Chris Pulver. We are live. All right. David, good morning. Catherine, good morning. FK, good morning. Nice to see everybody. Happy Friday, traders. All right. Morning, Chris. I'm just going to post this in Telegram that we are live. And same thing with Flex. There we go. All right. Morning, Jan. Nice to see everybody. Okay. So gapped lower, 433. I'll be watching this for the morning to see where things shake out. I think we have a big 360 level on the SPY. 360 on the Qs. That's a big level to the downside. Might look at some option plays there. The SPY is a little bit tighter, but that was a pretty big gap. 436.50 closed yesterday and a gap down to 433 today. So let me see, SPY wise, we're just pressure to the downside. Maybe some heavy profit taking as we get into Q2. That is important. I mean, next week is the last full week of trading to wrap up the quarter. It's been a heck of a good run. I mean, the whole first half of the year has been pretty fantastic. So I'm sure that's what's happening here is a little bit of pressure on the downside to see some profit taking and protection. I'm curious if the second half of the year will be some pretty intense sector rotation. We're looking at that this week in Equities on Demand, going to different sectors. Bear call. Is that another partial assignment on Okoa? What the F, man? Another partial assignment on Okoa with a 37. Huh. All right. So I need to take care of that today in class. Closed out for some nice profit this morning on those $1,700 on those option plays this morning. Still have some spreads out to next week. The VIXM is in some profit now, finally. VIXM 2194. I can't believe this thing is not moving. I feel like this instrument is broken. I mean, we've literally had like a 3 to 4% sell-off, and the VIX hasn't moved at all. The VIXM is barely budging. That's kind of nuts. So anyway, I'll keep an eye on that one. Maybe I can close that for profit today. But that's it. Okay. No. Oh, sorry. Wait. Yep, you can hear me. I just didn't switch it over. I know. I got a bunch of Steve going. My fault. So we know there's risk in trading. That's me. There's the trades. There's the screen. I was talking about the VIXM. Yeah, sorry about that. We're good. Confirm AB. Let me know if you can see the charts now. I was just operating with 4 monitors and I forgot to switch over the broadcasting software. Good. All right. Now it's official. Okay, reverse split on VIXI. Well, VIXI is not what I like to trade. VIXI is kind of a garbage instrument. VIXM is at least midterm. So this one doesn't get repriced as frequently. I don't know. We took a long call option on this one. I think out to August. I'm gonna assess and see how that's looking right now. Let me do one thing on this little risk graph. So let me check and see. Still checking the VIXM. And if I did a long call, we went out to August 18th, I believe. August 18th. And put in a $21 call. VIXM. Okay, there we go. So August 18th, $21 call. Yeah, I mean that's the sweet spot. But like I said, I mean it's surprising that with the markets, I mean the SPY and the Qs, the Dow, the Russell, I mean everything's down this week. This little sell-off here is down about 2.4% on the SPY. The Qs pressure to the downside with heavy tech leading the way, but we're down 2.82% with a high to low around 3% from yesterday's low. Yesterday's low got us about 3.5%. So still hasn't really been much to budge. The Dow, there's the DIA probably down 2% or so from high to low. That gapped lower as well. That's down 2.4% currently from the recent high. And then the IWM, we've been pulling back down to that 180 breakout point. This is down current price around 3.97 with today's gap open, it was down over 4%. So yeah, I mean, everything's down and volatility index is showing very little of that. So 13.66 on the VIX. I don't know. I mean, maybe it's next week as we wrap up the quarter. Maybe things get a little bit nastier. Maybe it's more profit taking. It's just a slow burn to the downside. But we'll just keep an eye on things. I don't know. I'm going to give that call a little bit more time, though. Okay. Morning, Jacob. Morning, FK. All good. All right. Currency strength. Kind of a risk-off flow for the day. The Swiss is getting stronger. So we had 2 rate hikes this week. The Great British Pound. So the Bank of England raised rates by 50 basis points. That was a bit of a surprise. The forecast was 25 basis points. But their inflation came in this week also hotter than expected. So Bank of England raising rates to, I think they're officially now at 5%. I saw that the Bank of Turkey raised rates for the first time in a while. I'm going to see how that Turkish lira is affected by it. It's not something I'm trading necessarily, but that was a big 6.5% hike yesterday. So 15% for the Bank of Turkey, UK. That was yesterday, right? Yesterday morning. 50 basis points hike. Now they're at 5%. The Fed is out in July. I think it's July 26th. July 26th is the Fed. After another round of CPI and PCE and PPI and employment numbers and all this stuff. So the Fed will be meeting to meeting. That's what Jerome Powell talked about this week. He had a 2-day testimony Wednesday, Thursday. Any other big decisions? I think it was Swiss National Bank. Switzerland raised rates by 25 basis points as expected. Bank of England came in with a surprise. Inflation readings for country. Inflation reading by country. Let's go G20. United Kingdom came in 8.7. The previous reading was 8.4. So they actually came in year over year hotter than expected. The U.S. is down to 4% with expectations that the next print for July, which would be June CPI, is going to be somewhere like 3.2. Powell's not changing the message. He still keeps saying 2%, 2%. The Fed's going to keep jawboning as much as they can without necessarily having to raise. But if they raise rates in July, that might be, we keep talking about, there's something that the Fed's going to break. I mean, if they raise rates in July, which is expected still, if they raise rates in July, that might be kind of the final, punch in the nose of inflation. Like the readings could come in and be low threes year over year, and the Fed could still come in and raise rates and then pause for the rest of the year, not cut for the rest of the year. That might be enough to at least put in some rotation out of tech. Tech is, there's catch up tech, meaning like it's not Apple, it's not Microsoft, it's not Google, right? It's not your large cap, mega cap tech that's led the way. It's not your Nvidias. It's other stuff. Anything that's showing generative AI, cloud-based AI, Chat GPT, and some derivative of that. That's what's been the hot commodity this first half of the year. But I think that's subject to change and rotate. Turkey inflation, previous was 43, now 39. They just raised rates to 15%. I want to see what that did to the Turkish lira. This has been pretty much a broken chart. Ugh, nothing. Wow, look at that thing. This is so insane. I don't even know if brokers are even offering this instrument any longer, but that's a 57,000 pip rally just in the last month. No, no, no. Yes. Look at that. So from May 30th when this thing broke out. So we've been less than a month. This thing's up 57,000 pips. And it's not that long ago that we were having this conversation on the Turkish lira, where it already looked like a broken chart. There was crazy amounts of intervention from the Bank of Turkey, and we had a 100,000 pip rally and an 80,000 pip spike. And then what proceeded after that was just a run right back up to the tops all over again. Okay. And then it looked like it was just broken, broken, broken. I was like, at some point, this thing I would think would rebalance. Nope. Another 57,000 pips to the upside. So, I don't know. I mean, obviously, like I said, I'm not trading this instrument. It wouldn't surprise me if we just wanted to come back just for fun to see if this comes back to this area or comes back into a pocket. If there's, again, heavy amounts of intervention. We have two big weekly pivots, a lot of pockets to trade back to, but I certainly don't want to be on the wrong side of a 10, 20, 30, 40,000 pip move where I'm, shorting this. I'm looking at this like, oh, this is positive swap. And I'm upside down 50,000 pips. No thanks. So anyway, crazy stuff. Dollar Sing, this one's rallying up to 35 and change. We're in nice profit. Hopefully this will be heading up to 37.50. Dollar CAD, hanging into those levels. I said I was willing to hang on to this thing as long as we didn't break at 31.50. I was willing to hang down to like 3,000. I talked about it this week in the flex room. I'd like to see if the dollar CAD can get back above 32.50, 32.50 and holding. I'm going to see if we can fill this pocket right here. So this level, we finally broke these lows, but past resistance become a decent support. I'm willing to take it down a little bit further and see if this pocket gets filled. We had some pretty overbooked or oversold conditions on a lot of time frames, so I'm just chilling. Ruthann says Congress member even asked Powell if they would make him consider moving off of 2%. That's exactly right. And honestly, I've seen that response all year, not from Powell, but I'm saying like the macro analysts out there have talked about, maybe the U.S. needs to just switch the target, right? Instead of being die hard at 2%, sub 2%, that we accept a higher inflation environment, like a 2 to 3%. I mean, and I say we accept it because we now have the federal funds rate at 5.25. We're potentially going 5.25, 5.5. So we are at restrictive rates, right, where our Fed funds rate is outpacing inflation with the current readings we have. But it's not in everything. I mean, Olive Garden, Darden Restaurants just reported earnings. I think that's DRI. Darden Restaurants just reported, and they had a big drop. And they were even saying that costs are expected to go up another 3 to 4%. So we're going to pass it on to consumers. It's still happening. Guess what? Everything that you pay for is passed on to you. If you're a consumer, you're buying goods and services, companies aren't taking it like, oh, we'll absorb the costs. We're good. let's make sure everyone is just a happy patron. No, I mean, we're paying for the extra cost of everything, you know. So I think one of the most annoying purchases, and it's infrequent for me, but every now and then, a good old soda at the grocery store, a little 20-ounce soda used to be, 99 cents, $1.09, $1.10, whatever. Now it's $2.39. It's cheaper to get a friggin' 2 liter, pretty much, than it is to get a little like impulse checkout. It's like that. You notice that stuff, right? And that's across the board on a lot of stuff. I mean, it's just so anyway. Consumers, if we're the ones that are continuing to pay for stuff, and then we're going to keep paying for stuff, and companies' margins will continue to be okay. But companies are not going to eat into their profit margins just to say like, well, we're trying to make it better for the consumer. They're trying to survive just like we are, and if they can keep their margins the same, they pass on all the expenses to us. So, but that's interesting. Yeah, I mean, I've seen that like people expected the Fed to just be like, yeah, we'll just tolerate a 2 to 3%, and honestly, they might. I mean, in the secret rooms that we don't hear in the media, maybe that's the case. Maybe 2 to 3% is totally acceptable. We keep the rates at 5, 5 1/4, 5.5. We're sitting at restrictive rates. But like I said, a lot of times what happens is the Fed goes in these big cycles where things they run until they break, and then they run until they break, and they run until they break. And so there's not really an equilibrium, right? It gets back to it every now and then, but it's because it gets so out of whack. So that's why I'm curious this year, like how this whole thing plays out if we go to the Fed rate decision, which is expected to raise. I think it was in the 70% probability range. So here's July. Yep, 72% expected to raise rates again. So this hasn't really changed. It's actually gone up for the last 2 months. And December is not expected to be a cut. So if we raise in July, it's going to be a pause for the rest of the year. That seems to be the path forward. Like I said, we've had a great first half of the year. Let's see how the second half of the year is. Is it a sector rotation, right? I mean, we've had a pretty awesome run. I mean, stocks that are kicking butt. I'm in ton of profit on CCL. NCLH is another cruise line. 1908, I've got them both covered, and I'm going to try to let those run. We have a ton of credit spreads down here at the lows. SoFi credit spreads are looking great, even though this thing's pulling back hard. My 1050 covered call is out to this Friday. That's going to, I'm just going to lower the cost basis again by another 22 cents. And I still have a bunch of 6x5 credit spreads that are still looking good. And honestly, I would still sit here and accumulate some SoFi because come September, October, when student loans are kicked back in and there's no longer a pause, SoFi is a servicer. That's probably where some big revenue comes in, you know? So anyway, there's a lot of opportunity. That's what I'm saying. And if we get out of tech, if we go to XLK, which is right up to these highs, tech is hitting the same high. This is the all-time, 2021 high, December, when things kind of started to break down. 2022, of course, we know what happened. But is it a surprise that we started to fail right off these levels? No, not at all. Trend line there, right? If tech continues to lead the way, great. We'd have to break and prove that it's going to go higher. Otherwise, it makes sense that this resistance here, there's levels to pull back to. And honestly, this could just be a big resistance level. This could be a big support level and the low. And guess where we operate for the next year or two? Tech had an awesome melt up and everything thanks to AI and all this other hype. But is it the real deal? We're going to find out. Because if all of a sudden we're having this conversation in 3 months and in this tech sector, this is the XLK Spider ETF, okay? This tech sector is back down to the middle again. I mean, if you're looking for profits, it's not going to be in tech. If this thing drops from 176 down to 150, what would that be as far as a correction goes? And we know the tech is volatile, right? But if we drop back down somewhere in the middle, I mean, you're looking at about a 15 to maybe a 20% correction. That's super volatile, right? To go, just rip like crazy and then pull back halfway. But that's the market. So anyway, crazy stuff. Dollar index 102 finally got some bid on the dollar. I've been talking about this pretty much all year. One of my outlooks is, at least in the near term, the dollar gets bid back to 105, 106, and we start looking for a bigger drop. Bitcoin's been a big story this week. I'm trying to think here. Oil. Dollar, oil, gold, silver. Oil dropping to 68. Still really contained. Strong support at 65. I really wanted to do some trades on USO and oil. The problem is just the premiums were so bad. As a seller of options, the premiums were terrible. I think we looked at it yesterday, and maybe it was what you take a 50 cent to a dollar spread on both sides, and maybe get 10 cents of profit. I mean, high probability, but I mean it's ridiculous. I'm not owning USO. I mean, I'm not taking a 90 cent risk for a 10 cent profit. So just that's what sucks is some of these like good looking trades where I'd like to do some iron condors and other advanced, 4 leg trades. They just don't pay anything on the sell side. So anyway, oil still, very choppy. Gold and silver, gold's been dripping lower. So we said if we broke below 1930, look to short right in here. So it's heading lower. I mean, I think that gold might be an 1850 to 1820 area, just kind of slowly working its way lower. Now, having said that, because we have this little pop up here to this monthly pivot, let's look for gold to do this. I could see this happening here. A little bit of a flat pattern. Gold puts in another equal top and then sells back off. Okay. So I'm still right now, because of this pretty massive resistance level around 2050 to 2075, I'm still looking for short gold. And if gold settles into 1830 and 1700, those are big levels that I'm interested in buying. But for right now, I think that if the dollar gets bid back to 105, gold drops, silver probably drops as well. Silver's been dropping pretty hard the last 3 days, and then today it's up a little bit. But still, channel support is there. Otherwise, if we go sub 20, on silver, then we're looking at just revisiting this base, probably around 18 bucks. So $20 to $18, very interested in buying. If it gets lower than that, that's a big buy zone for me. If it gets lower than that, I'm taking this all the way down to 14, and I'm buying this and holding this for as long as I need to. I'm looking at, at least 100% upside on that trade if I take some ownership at 14, 15 bucks. Okay. And then, like I said, big story for the week was Bitcoin. We're trading at 30,000. We're clinging. Not too bad. Stock BITO. This is a ProShares Bitcoin ETF. We're at 1691. I put a bunch of credit spreads in, 17 by 16s that are all in profit right now, which is pretty nice. And also GBTC has come back in a big way. That's a grayscale ETF, 1796. I have some ownership of this one down in the low teens. So $12 or $13. This is back in profit. And then also some mining stocks, MARA, Digital Marathon. Again, just kind of correlating with Bitcoin. Yearly pivot up here. I still think that this level on MARA would represent really the 30 to 31,000 mark. So we're right there. But we have to get we have to break, and Bitcoin's gonna have to make a run above 31,000 to have this mining stock go higher. So mining stocks are a little bit trickier. We've had some good success in this one. We got into some lows. I own the stock around like 15 bucks is my break even. So I'm still not in profit, but GBTC I'm good. And BITO I'm good. And obviously I have Bitcoin holdings as well. And Bitcoin's looking more promising. But, getting the run, stalling at the same resistance level, I think this gets people excited, but it also might be a fake out. We come and hit this level, come all the way back down to retest, come all the way down to retest. We'll see. I still think 20K, 30K is a resistance level. If we make a surprising break, that's exciting stuff, right? That'd be a great, anybody that's trading crypto or holding crypto, that'd be welcomed. Because if we get to open space, our next stop's probably 45K. We get to 45K, I think there's going to be enough of a run to this to probably break the 68K high. And honestly, we might make a run where this thing goes ballistic for another big rally from basically, 12,000 with FTX drama. And we rebuild off of that. And then all of a sudden we're talking about this at 100K. And you're going to be happy if this happens, you're going to be happy that you had any participation here in the 20 and 30s, right? And maybe you don't want to trade it, but there's ways to do it. If you just wanted a little bit of exposure, GBTC is not a bad way to do it. BITO is not a bad way to do it. And then BlackRock put its hat in the ring this week for potentially putting in an ETF that's a spot Bitcoin ETF as well. So that's where a lot of that ran from. Let's see here. Andrew says, "What effect do you think BRICS will have on the dollar?" I keep getting that question. Look, it's the same. It's the same situation. I mean, look, BRICS is a legitimate threat, but at the same time, I just like to me the way the BRICS nation becomes a real viable alternative is if it's a commodity backed economy, because I don't think the world is going to get 100% behind China. Obviously there looks to be some separation and people are wanting to, dethrone the dollar or whatever. But if it's commodity backed, I can see BRICS taking some legs and getting some leverage. Obviously, when the dollar has its big risk off flows and the dollar hits, it's called the milkshake theory. It's really interesting, but it's so true, and it was very true in 2022. It was true in 2008 and 9. Um, but the reality is the dollar, is still the world reserve for now. But I think if BRICS gets more attraction from commodity-backed instruments, and that's where the strength of their economies lie, then I think that's where BRICS, kind of holds its own. Um, but again, what I watch this instrument right here, the DXY. And do I think longer term the dollar index is going to drop? Yeah, I do. I think that from this high to low, a little bit of correction in here, I think the dollar comes back down to these levels. So I mean, I'm looking for some non-U.S. growth. I'm looking for the dollar. It's had its run. A lot of this exciting central bank stuff has been priced in ahead of time. When the dollar was ripping, the economy was dropping. Right, the stock market was dropping, and now that the dollar's going nowhere and it's stalled a little bit, it's not risk-off flows. That's why we've seen a movement back in equities. So, I mean, we'll do more about BRICS. A lot of stuff happening this year. I know there's 18 countries that are signing up or 20 some countries signing up. It's not going away. But like I said, the only real strength that I see happening as a threat is if it's commodity backed. I don't think if it's like, well, China's putting a Chinese yuan, that's going to become the BRICS currency. I don't think it works like that. I think it's going to be it's the gold standard. It's oil. It's a non-USD petrodollar, right? It's euro. It's something, but it's going to take a lot of time. So it'll continue to develop. I try to block out a lot of the noise in general. I'm aware fundamentally and news wise, but I still trade price. That's the most important thing. Okay. All right. Yep, you're right, Catherine. Thanks. It's 10 o'clock. I know we covered a lot in a short amount of time. That's good. Let me do a quick peek. I'm going to take a look at the robots this week. So Perfect Storm. Just before we go, my Perfect Storm Pro closed out with 164 pips this week. My Perfect Storm OG, which is running now for 4 years, closed out for 200 pips. My Pockets Pattern Pro closed out for 643 pips. My Equalizer Pro is up 179 pips. And last one here, 292 pips. Very good. So pretty good run on robots this week. I'll add this up. 164 and 200. Move this over here. And 643. And 179. And 292. Okay, so 1478 in auto trades this week. We got a couple of extra positions in. Let me just double check my Telegram channels for the trading rooms. We did some extra trades on Disney that are pending. CCL, we did a long call. Oh, we closed that one out. So we got the shares. We got some credit spreads. NEM was a new trade this week. The VIXM we're in. We're going to see if this little sell-off the last 2, 3, 4% to the downside is going to spike up in the volatility index. These are some symbols we were interested in. GoodRx, we're playing some wins there. Okay, so that's that. And then I posted some new trades yesterday in Flex. Right here, we had setups on the yen crosses with stop sells. So did the euro yen trigger anything? Not yet. I don't think yet. Let's go to the 4-hour. Did it? Or the daily? We put a stop sell below the daily. Yeah, I guess it would have triggered. Yep, it would have been right here. We put a stop sell just below this level, so it got spiked in. We'll see how it plays out. I mean, again, this could be, I don't know, maybe it's silly just to even trade the stupid yen in general. If I get another paper cut on yen crosses, I might just wait for a whole freaking trend line to break and just not even trade it. I'm certainly not going to turn this into a battle royale. I've been, if I'm willing to take the trade, I want to have stop losses. That's the plan. So anyway, euro yen and Swiss yen. Swiss yen I saw was climbing as well. So Swiss yen did not activate the trade because our sell stop was below this low from yesterday. So this one did not trigger. Looks like the euro yen did with a little bit more volatility. So we'll see how they play out. Okay. All right, everybody. If you do me a favor before you head out, will you hit the thumbs up button for me? We had 30, 40 people watching. Click that thumbs up button for me, please. Kindly like the session. Thanks for tuning in. Just typing this out. Okay, and we'll be back on Monday for another Pulver report. Equities on demand. Let's switch gears there. I have a Masterflex class this afternoon at 1 p.m. and Bank of England 6.25% end of year. Wow, that's a lot of more additional raising by the old Bank of England. Okay, I'll let you go. See you in class. I'm going to switch over to the trading room. Thanks for being here. Have a good weekend. Bye.